Depends upon the nature of your business, but I would say that anything between 12 to 18 months is what would make me feel comfortable. If you have 24 months, you are king. If you are less than 6 months, then I would actually urge you to get off your chairs right now and start picking up those phones and dialing in all your connects and start fundraising right now. Hi, my name is Manpreet Ratia. I'm a managing partner with Jungle, and I'm here today to talk to you about fundraising and what it means in 2022. One thing which we need to be prepared for is for fundraising to take a little bit longer. So deals or term sheets and fundings could get closed, let's say, in anything between 2 to 3 months. Right now, I would just multiply it by 2. So fundraising still possible, but I think the realist in me tells me that if you're very early stage, maybe seed, if you are like pre-series A, etc., those guys may find it a little bit tougher. They may get a little bit longer because your product market fit is still not yet defined. There is still not enough revenue which you can probably demonstrate. So for them, it may get a little bit tougher, but I still think it is possible. It depends upon the nature of your business, but I would say that anything between 12 to 18 months is what would make me feel comfortable. If you have 24 months, you are king. If you're less than 6 months, then I would actually urge you to get off your chairs right now and start picking up those phones and dialing in all your connects and start fundraising right now. I think what you would find us doing is asking the same questions, but taking a little bit more time in terms of wrapping our heads around the answers and perhaps also double-clicking a little bit more around your roadmap to profitability. Nothing has changed for us. At Jungle, parameters which we looked at, which drove our investment decision, remains the same. We're still focused in terms of the team. We're still focused in terms of the opportunity. We still are super excited about the ecosystem and the quality of the founders and the ideas which is coming through across in the region. We still focus in terms of the ability of that business to build to last. That's something which we're still very passionate about. So be prepared for an enhanced level of scrutiny around that one, for slightly tougher questions being asked, and be prepared for you being able to demonstrate data of showing of how you have been able to make progress around some of these parameters and how sophisticated is your level of thinking around that one. I would approach it simplistically in 2 buckets. Number one is, I would look at the cash in bank which I have today, and I would actually put in a fair amount of work with myself as well as my team in terms of figuring out how can I extend that cash runway. Today, I could be burning at a certain rate and I may have 12 months cash. Can I extend it to 18 months? That's step number 1. Step number 2, pick your battles which you want to win, and therefore on that basis, I would then figure out what are the vital few things which I need to get done, and for that I need extra cash. Once I've done this work, I would still go out and raise. I still continue to say that, look, in a down market, cash still continues to remain king. So therefore, always be out there, always be talking your story, have faith in your business, but do your homework. Figure out what you can do in terms of extending your runway, demonstrate that you are actually thinking around conserving cash and you're spending cash correctly. But that doesn't mean you don't stop spending. That doesn't mean that you don't stop raising.